What's up, everybody? Rob Wilson here, financial advisor, host of the Money Monday segment on Rob Wilson TV, and founder of the March Money Madness Bracket Challenge. And this is course number 1 in the March Money Madness Insider Group. Thank you so much to everybody that signed up for Insider. And if you haven't signed up for Insider yet, this one's a freebie, but hopefully the information that you learn in this video will encourage you to join us for the rest of the course. So here's what you're going to learn in this video. We're going to talk about what investing is and what it isn't. We're going to talk about why I think you need to be invested. And this topic is very, very important. We're going to talk about how to set your expectations so that you can have a realistic picture of what you can earn when you invest your money in the markets. We're going to talk about the most common mistakes and how to avoid them. And most importantly, we're going to talk about how you can get started now, because we never end these classes without talking about an action item. I don't want you guys to just sit there and watch and listen. I want you to go out and take action by putting these tips and tools and tricks into your investment life right away so that you can really start to change your life. But first of all, let's go over some ground rules. This is not going to be an exhaustive list of every investment strategy ever created. I know there are a lot of different things that you could do with your money. This course is going to be focused on investing your money in the stock market. I'm not trying to overwhelm you by giving you too much, but what I do want to do is give you a simple set of techniques that you can use to implement in your investments right away. None of the stocks that we talk about in this course or in the game should be construed as me giving you investment advice or recommendations, okay? You're going to need to do more work to find out if you should really put real money to work in these investments, and we'll talk about how to do that in some of the subsequent classes, but please do not take me mentioning any stocks as my recommendation for you to go run out and immediately buy them, okay? None of the stocks that we mention are investment recommendations. They're used for illustration purposes only. One of the things that you have to get in your mind when talking about investing is that you're going to, quote unquote, lose money at one point or another. There is no investor in the history of investing that has never lost money on any investment. It's just not possible. So you have to recognize that that is an eventual occurrence. But what happens is good investors know how to manage the risk that they're taking, and they have a process for getting out of investment before it totally wrecks their investment strategy, okay? I can't tell you how many times I hear, hey, Rob, I'd like to get invested, but I don't want to take on any risk or lose any money. And I tell them that's just not possible. So you're going to have to find something else to do with your money. There's not some magic formula that I'm going to give you that's going to tell you when to buy and sell stock, because you know what? It doesn't exist. Because if I had the magic formula, guess where I would be? I'd be on the beach in St. Lucia or St. Martin or in the Cayman Islands hanging out. I probably wouldn't be doing this course for you today. So there's no magic formula that I can give you that's going to tell you how to buy and sell. But what I can give you, again, is a process, is tools, techniques that are going to help you make the best decisions that you could possibly make when you decide to put your money into the market. So let's talk about why you need to be invested, okay? You really have to start to invest your money because you are now responsible for your own retirement. Pensions, if you even know what a pension is, if your parents had a pension, you may understand what a pension is, and that was when your company, if you worked there for 30 years, they promised that they were going to pay you once you're retired for the rest of your life. Those things are going away very, very quickly. The most highly publicized example of pensions going away may be in Detroit, because the city is going bankrupt, and to try to figure out how they can save money, they're talking about slashing pension benefits. So what happens is these people were working for the city for years and years and years and thought their pensions were going to be there, and now they're talking about slashing them. And a lot of these people are up in age, and we're counting on that money to have a comfortable retirement. So pensions are going away. And for young people, if you're in high school, you might as well forget it. Pensions aren't going to be there. So the shift to the 401k retirement plan has now put you in charge of your own investments and of your own retirement. And what happened when they shifted to the 401k is they basically said, here you go, you manage your money yourself, and I hope you really know what you're doing. And they gave you a little pat on the back. So you're responsible for your retirement. Now, my philosophy is that if you want to make sure that you're going to have a comfortable retirement, you really need to earn more money. So that's the first thing that you're going to want to focus on, is that you want to make sure that you're getting paid what you're worth and you're earning more money for the time that you're putting in. But if you really want to multiply your efforts many, many times over, you want to earn more money, and then you want to take that money and be good stewards of it by investing it and letting your money work for you while you're sleeping. You work hard for your money, then take your money and invest it and let it work for you while you're asleep. Now, investing isn't all about retirement, because I know some of you guys are young and retirement seems so far away from you. So investing isn't all about retirement. It's also about giving yourself options. Okay? You can dramatically alter the course and the quality of your life if you are a good steward with your finances and you invest your money and you do it in an efficient way. So let me tell you a quick story, which should hopefully make all this make sense to you about how I got started investing in the market. When I was in college during the time when there was the dot-com bubble. So when all of the stocks like Amazon and all of these technology-based stocks were doubling and tripling, and just the market was going crazy. And I knew nothing about the market at that time. This wasn't something that I talked to my parents about at the dinner table. I didn't know anything about it. So, but I kept seeing all of these articles about the markets were soaring and this was doubling and people were making so much money. I figured, you know what? I need to learn some more about this. I need to figure out what all of this is about. So I went and opened up an account and I put some money in there that I could afford to lose. I didn't go put my rent money in there or my car payment money or money that I needed to eat. I put a little bit of money in there that I could afford to lose, and I decided to buy a stock. So stock at the time seemed like me to be a good thing to buy was 1-800-Flowers.com. And here you see an article. They had priced their IPO at $21 a share. So I decided to buy. Now here's the next article where it says the IPO of 1-800-Flowers was a bust. So what happened in short is that I got in, I lost money, and I learned some lessons. But the important thing here was that I got started. And it's kind of like riding a bike. I had to get in, I had to put my helmet on, I had to fall down a little bit, scrape my knees and elbows up. But you know what? Eventually I got back up on the bike. I kept trying to learn how to ride, and eventually I got better at it. And that's what I think you guys need to do. So as I started to get better, eventually I decided to buy a company that you might be familiar with called Apple Computer. So let me tell you what happened when I decided to invest in Apple. Let's take a look at a chart real quick. So around the time when I decided to invest in Apple, I really just finished business school, and this is in 2005, and the price of one share of Apple was about $36.90. If you fast forward to today in 2014, Apple is a much bigger company now, and the price of one share of Apple is $536. Okay, so what does that mean? Well, that means that if I bought 100 shares, which I did, that means I turned $3,700 into $53,000. That's a 1,350% return. And so what does that do for your life when you're able to do something like that? And again, I'm not suggesting you run out and go buy Apple, because who knows what's going to happen with Apple from here. And I'm not saying that this has happened with every investment that I've ever made. But what this did was give me options in my life. Okay. Now, certainly I won't be able to retire off of that one trade, even though that I'm happy that I did it. I'm sorry that I didn't buy 200 or 300 or 400 shares, but I'm happy that it worked out. But it does provide options in your life, because I knew that no matter what I did, I had something to fall back on. Okay, so this is what it can do for you. What if you want to start a business one day? What if you want to go back to school at some point? What if you want to buy a house? What if you just want to go on a vacation? By being good stewards of your assets, by investing in things that you know and you're familiar with and you're comfortable with and you think are going to do better in the future, it gives you options in your life. And this is why I think it's so important that you get invested, because it can change the course and the quality of your life if you get invested and you do it the right way. And ultimately, you're going to have more control over your life when you're good with your money. Okay. So let's talk about where I think your money should be, or you tell me where it should be. Here's a chart of the different investment classes from 1926 up until 2011. And so that includes the Great Depression, it includes 9/11, it includes the dot-com bubble, it includes the real estate bubble, all of those things. Okay? And what you see from this chart is that inflation has averaged about 3% a year. And so this is important. If you know what inflation means, that means that how prices of things that you buy are gradually going up every year. So some people are afraid to take any risk and they want to just put their money underneath the mattress or just not really save it or do anything with it. But guess what? It might help you sleep better at night to do that, but you're losing money every year because the prices of things are going up. So if you don't invest your money so that your money grows as well, you're losing money every year to inflation. Okay, so inflation has been 3% a year. T-bills have averaged about 3.6% a year. Government bonds, 5.7%. Large company stocks, 9.8%. And small company stocks, 11.9%. So you tell me where your money should be. Now, let's not go off the rails here. I don't want you to go out and telling your friends or your parents that Rob Wilson had this class today and he told me that we should just go dump all of our money in small company stocks. That's not what I'm telling you. But hopefully what this chart shows you is that you do need to take on some risk if you really want to make your money work as hard for you as it possibly can. And what that means is that you're going to have to put some of your money into the stock market. Now, what are the most common mistakes when people start to get investing in the market? Well, the number one is procrastination. And this may be a mistake in your life in general, in school, in business, or whatever, but it's a very big mistake when it comes to investing. And here's what people say: I'm not investing right now because I don't have any money. Or I'm not investing right now because I don't have the time to do so. I'm so busy at work that I don't have time to invest my money. But what people don't realize is that time is money. And let me illustrate that for you here. Let's say I can give you $1,000 each minute for the next 35 minutes, or I can give you a penny doubled each minute for the next 35 minutes. Which option would you choose? Well, let's take a look at this. If I give you $1,000 a minute for the next 35 minutes, you're going to end up with $35,000, right? Okay. Now, if I give you a penny and double it each minute for 35 minutes, what do you get? Well, you get $171,798,691. And let's not forget the 84 cents. Okay? What does this mean? This is the power of compound interest. So for all of the people who say they're not investing because they don't have much money to start with, guess what? You don't need a lot of money to start with if you give it enough time to work and you use the power of compound interest to make it work for you and to make your money grow. So you've got to realize that time is money. So that procrastination excuse, hopefully you guys don't use that one anymore. Okay. The next one is investing too safely. Again, people come to me and say, hey, Rob, I want to get invested, but I don't want to take any risk. I tell them you might as well take your money and go to Las Vegas because you probably have more fun with it, but there's always going to be some risk. It's all in how you manage it that makes the difference. Okay, let's talk a little bit how you deal with risk. And an important rule here is the rule of 72. And the rule of 72 says that if you take 72 and you divide it by the annual rate of return that you think that you can get on your investments, that's going to tell you roughly how long it's going to take for your money to double in value. Okay, so here's an example. You can invest 72 divided by 10 if you get an average of 10%, and that's around what you might get in the stock market over a long period of time. And so that means it would take you about 7.2 years for your money to double. Or you can do 72 divided by 1%. And 1% is basically what you're going to get on a CD or a money market or a savings account or something like that. If you do that, yes, you're going to earn a little bit of money, but it's going to take you 72 years for your money to double. You tell me which one you want to do. Okay, so this means you're going to need to take on some risk, and you're going to just need to give it time to work, and that's how you effectively deal with risk with your investments. Also, time is your biggest risk reducer, okay? So let's take a look at McDonald's and a 6-month chart of the stock price of McDonald's, okay? So here we see over here to the left that, the stock price was up here. Oh, then it dipped down a little bit. Then, oh, wow, it's back up again. Then it goes down. It goes back up a little bit. Then it goes down some more. And then finally, it spikes back up at the end. So as you can see, that's a lot of up and down, and that's enough to really make your head spin. But here's a chart of McDonald's for 5 years. And yes, I understand that there's still a little bit of variability, but if you bought the stock way over on the left-hand side in 2009 and you still held it today, that chart roughly looks like a straight line from under $60 to now close to being $100. That game is a little bit easier to play than that short-term game, and that's why you want to be invested for a longer term. You don't want to just be jumping in and out of the market when you hear something on the news or somebody in the barbershop saying that they heard about a hot stock. That's not how you invest in the market. That's trading and that's gambling. If you want to invest, this is how you do it. So what does all this mean for you in your life? Okay, well, most of all, if we go back to retirement, this is going to help you retire on your terms. So, for example, someone who's 15 years from retirement and never saved a dime in their life. So they've been out having fun, partying, going on vacations, never saved any money. And then they finally realize, hey, I'm going to retire in 15 years. Maybe I want to save some money. Someone who's starting from zero, but who thinks they can get 10% per year on their investment, has to contribute about $2,400 a month in order to reach $1 million by the time they retire. And we'll talk in later classes whether $1 million is a lot to retire on. But let's just say we want to reach $1 million. This person has to save $2,400 a month. Conversely, if you're a college graduate with 45 years to save at the same interest rate, 10% a year, only has to save $95 a month in order to reach $1 million by the time they retire. Now, again, you guys tell me which one you would rather do or which one you think is easier to do. I would say that it's easier to save $95 a month. And so what that means is the longer you have money making money for you, the better off you are. And I hope you guys understand that from that example. So here's the moral of the story. You need to be invested, period, point blank. No questions, no ifs, ands, or buts. You need to be invested, okay? You are responsible for your financial future. There's no more pensions. Pensions aren't going to be there. Who knows what's going to happen with Social Security, okay? So you're responsible for your financial future. That means you have to earn as much money as you possibly can by getting a good job or starting a great business. And you have to do something smart with the money that you're able to earn. Time is money, okay? The longer you have money making money for you, the better off you are. And that time also helps you deal with risk, okay? It's going to smooth out the way things look if you're not trying to jump in and out of the market all the time. And most importantly, don't start investing in things that you know nothing about. I'm not suggesting that because you need to be invested, you need to pick up the paper or, again, see something on TV and go, oh, that sounds like a good idea. Let me invest in that. You guys see that I did that with 1-800-Flowers.com. It didn't work out so well. When I started doing more research and learn more about the market and I invested in something that I felt like I knew and I gave it time to work, it's been very fruitful for me so far. So here's your action item, okay? Again, we don't end the class without an action item because you guys need to start to take action so you can change your life and your investment portfolio. So we're going to start with what you know. What I want you to do is take a look at where you spend your money, and I want you to review the top 20 places where you spend your money. Now, you may not know where you spend your money, and that's probably a topic for another course as well, but figure out the top 20 places where you spend your money. So if you have a mortgage, it might be JP Morgan Chase or Bank of America. If you go out to eat, it might be McDonald's or Chipotle. If you've been to the mall, it might be the Gap. If you have a car, it might be Ford. Any of these things, figure out the top 20 places where you spend money. Okay. Not all of them are going to be publicly traded companies. So if you do those top 20, I'm guessing that you're going to be able to pull out at least 10 public companies that you do business with on a regular basis. And that's how you start with, because you know what? You know where you spend your money. If you're an athlete and you buy Nike, Nike's a public company. You know when they come out with good products or when they have crappy products. Okay. So you want to start with the places that you spend money. Those are the places that you're going to know the best. And we're going to take that list and we're going to use it as we learn more in the subsequent courses about how to analyze stocks and how to decide whether you should buy or sell. Okay. So that's it for lesson number 1 in the March Money Madness Insider Group. I want to thank you guys for being here today. If you haven't signed up for Insider yet, make sure you jump on over to robwilson.tv/join Insider. We've got so much information to cover, and I guarantee you'll be a much better investor after having gone through the course. If you want to catch up with me on social, feel free to look for me on Facebook, Twitter, YouTube, LinkedIn. I'm at Rob Wilson TV on every single one of those platforms. So guys, thank you so much for being here today, and I will see you next time.